All right, so with me on stage, literally, I wasn't kidding, this is Cris Tran. He is from the U2U Foundation, and he came literally all the way from Vietnam to join us here in Silicon Valley to moderate the next session. And we will also see him later in a very interesting fireside chat. So I will leave the longer introduction to the later part of the section. But with that, I would like to welcome Cris to the stage. And please take over. Thank you very much.
Thank you, Thomas. And it was completely unexpected that, it wasn't script at all, right?
It wasn't, yeah.
But right before our panel, I think Olaf was mentioning so much about Vietnam that I was like, yes, because this exactly, the conversation that I had with Thomas, a few weeks back. And I tell him that, you can't really, estimate and see how Asia and in particular, like Vietnam are thriving in this Web3 and a little bit of AI, movement and everything. So that's why, I have the honor to host this, a really good panel with some of the old friends and new friends. So we have Karl from Arcane Group, we have Miko from Gumi Capital, and we have Alexi, all from respected, VC. So maybe before we start, I would let the, our panelists to share very quickly about themselves. So from my studio, maybe we start from the top. Miko, you want to go first, to introduce
Sure.
about yourself and, your VCs. It's been a while since I sitting together in the same panel with you.
Yeah, absolutely. Thank you so much, Cris. So my name is Miko. I'm with Gumi Cryptos Capital. I'm a managing partner here. And we are an early stage venture capital fund. And we're really sincerely believe that the internet is being rebuilt on a foundation of new protocols, and that these new protocols really have to do with advancement in cryptography. So, we're really excited about these technology trends. And obviously, when we talk about a new internet and new infrastructure for, applications and for society, we're just very excited to see, other relevant technologies, obviously the emergence of Web3 applications, and of course, AI. So, from our perspective, we've done some really interesting intersectional investments into the block as an AI company. We were early stage investors in OpenSea, Yield Guild Games, 1inch, and a number of other unicorns. And we're currently deploying capital out of our Fund 2, $110 million Fund 2. So excited to be here.
We got some pretty cool project coming from Asia to share with you later as well.
Great.
So Karl, you're next. So Karl is a good friend, and we hang out a lot, like the last time in Singapore and Vietnam. So we see each other.
Thank you, Cris. My name is Karl. I'm from Arcane Group. So we are currently about 200 million AUM VC out of Singapore. We are quite agnostic, but officially we have a couple of verticals that includes infrastructure, entertainment, which is also gaming, and IP rights, those sort of things, as well as DeFi. So we're currently deploying as well, just like Miko just mentioned. We do predominantly early stage projects, but we also look at later stage ones, like up to Series A, I would say. We are very keen on looking into AI. It's not something we've done a lot of. We're quite new still, only 2 years old. So I'm super excited to be here today, and super excited to see what, wow, AI can help and bring out as far as the intersection between AI and Web3.
Okay, so maybe last, Alexi, maybe you share with us about.
Sure. Great to be connected. Miko, always great to see you. I'm Lex Solit with Metamatic. Recently launched our fund. We are all pre-seed and seed, so very much early stage. We're exclusively focused on Web3, and part of our thesis is around sort of the middle adopters, or sort of this next wave of users beyond the core crypto natives that we think will continue to come on board and start using Web3 applications and infrastructure as the market matures in the next, call it, 3 to 4 years. So yeah, I'm myself managing partner. I'm based in Dallas, actually in the US, and then got another partner in Asia, in Hong Kong. So that's kind of a quick summary of ourselves, and excited to be here.
That's so cool to hear, because I went to school in SMU in Dallas, so it's yeah.
Nice. Yeah, let me know when you're in town.
Yeah. All right. So I think out of the 3 VC that we have today, it sounds like, right now Miko and Gumi Capital, I think, have a little bit of, like doing a good intersection between AI and Web3 investment at the moment. So Miko, maybe we start first with you. Like, what sort of definition that you're looking into, like AI decentralized sort of investment? I mean, what's your take on it? Yeah.
Yeah, so I would say the following, right? Which is that one of the things that we're quite sensitive to is we're sensitive to timing. And I think that one of the things that this market is very subject to is very much hype, right? So, as a foundational thesis fund, we don't chase hype. And I think that part of what we look for when we look for disruption is we look for what we describe as multi-vector disruption, right? Which is more complex thesis, right? Because if you really look at AI as advancing quickly, right? Therefore, let's invest in AI, right? Like, I feel like that creates a bunch of different problems, right? One problem it creates is it creates sort of low conviction founders that are chasing buzzword bingo, right? So that's a danger. I think another danger is it creates sort of overhyped price action, right? So you have like an overwhelming number of people who are thinking very linearly about a disruptive emerging phenomenon, right? So part of what we reasoned about, so I mentioned that we did do an investment in Into the Block, right? But if you look at the timing of our investment in Into the Block, which is ostensibly an AI company, it was actually, quite a long time ago and quite before any of the hype around ChatGPT or LLM or any of the new emerging AI trends, right? So for us, like, we really want to understand impact. But part of what we see is we actually see that AI has downstream significant impact on society itself, right? Because we don't deny that AI is a huge impact of technology. And what we do believe is, for example, that AI is actually going to expand the entertainment industry, right? So if you look at one of the largest investors in OpenAI, you're actually going to see Microsoft, right? But when you look at the pattern of investment by Microsoft, they're also investing many billions of dollars into Activision Blizzard. So what Microsoft seems to believe is that the entertainment industry will expand. And this is actually part of a orthogonal disruption, right? So part of what we reason about is if the impact is large, you start to see knock-on effects and you start to see ripple effects. And that, to me, like, those become really more kind of subtle and intriguing, which is that the average person on Earth may not just have 2 hours of leisure time for entertainment. They may end up with 8 hours a day of leisure time for entertainment, resulting in a 4x larger entertainment demand, right? So it's a very interesting kind of like way of reasoning about investment opportunity, right? So we don't just chase the thing very linearly. We definitely reason broadly about what the impact of something will be, and we try to invest behind more of the subtle implications rather than just directly chasing whatever buzzword hype.
Right. So Karl and Lex, like Miko shared a little bit. So what's your take on, what he shared just now, and then also like sort of the AI decentralized investment and Web3. I mean, if you guys have done anything within that, field so far.
Yeah, I mean, I have to agree as well with Miko. The whole using AI as a buzzword to slap it on, and then to increase your sort of like investment sizes or valuation is something we're trying to avoid as well. So I guess it's more of a complementary tech to what we're looking into already in Web3. It's not something like we would chase just a purely AI because it's AI, but for us, we're quite a gaming and entertainment focused company. So on the gaming side, of course, it has huge implication. It's not restricted to Web3, but also to Web2. You're talking about the better NPCs, the gameplay, procedural content generation, etc. So if it's something that enhances the products we already have, we're looking at, then it's something we're super interested in. But it's not something we're chasing just for the hype or the narrative, which is something we saw last year. And also, we don't go into those, deep tech valuations of billions. So it has to be something smaller and something that fits more into the like DeFi narrative or the gamify or entertainment narrative that we're looking into. So that's our current take, but we're still agnostically exploring it and open to it, but definitely staying away from the hype chase.
Yeah. And then what I would say is I do think it's really interesting what Miko said about one of the way to frame the opportunity is like, primary or direct effects, and then what are like second order effects where AI will impact different, whether it's consumer or B2B markets, using the entertainment example. I guess what I would say in terms of my kind of organizing framework are kind of the three buckets where I see the intersection of AI and crypto. I think one is AI and Web3 I think just a pure sort of developer tooling and software development. So AI enabling faster development of technology in general, which will impact Web3 as well as other sort of technology surface areas. The second is sort of data verification. So the ability to kind of authenticate AI models in an era of misinformation and challenges associated with that. And the third bucket is around incentive coordination. And so the ability to, reward different stakeholders in a distributed manner at scale is a way that I see sort of that's where Web3 can impact the development of AI. So those are kind of three broad themes. I don't know if they're completely mutually exclusive, collectively exhaustive, but I think those are important, intersections between AI and Web3. We haven't done yet any investments where I would say specifically like heavy on the AI and Web3, but we do like it when founders, where it's relevant, they're kind of a Web3 centric, I guess startup, if you will, is being thoughtful to the extent that AI is relevant and can, be advantageous or impact their success and execution of their business.
I think that's a great switch of gear that Lex laid out there for me. That within the VC, since right, we talk a lot about the AI and the Web3, kind of intersect with each other. And you mentioned three of the area that AI actually can make the most sense out of the Web3. But have we seen enough of development and learning and real cases in your experience to justify the expectation between AI and Web3, right? And so I think Lex share a little bit his tech. So what about you, Miko and Karl? Have you seen certain applications within the three example that Lex laying out, or you see something else? And is there any particular project that you want to share? I mean, just the concept wise and everything, how AI can fit into Web3 beautifully, for example. Miko, yeah?
I'm happy to kind of jump in, right? So one of the really interesting projects that we did invest in is a project called Everseed that is brought to you by a company. It's a game company known as Amihan Entertainment. And they're actually doing some really pioneering work intersecting user-generated content, with unique gameplay and AI-generated content assets. Now, I think that there is a very linear play with properties like scenario.gg, where ultimately what happens is simply that game companies lower the cost of the content production pipeline, right? So this to us is not disruptive or interesting or exciting or an opportunity, right? For us, the idea to intersect user-generated content is really related to the kind of seismic shift of the idea of what happens to employment in a post-AI era, right? So the thing that's very interesting is that when I talked about the idea of a potential 4x increase in the demand for entertainment, right? Really because the average human on the internet moves from 2 hours a day entertainment demand to 8 hours a day entertainment demand, right? So the thing that happens is that more humans actually become entertainers, right? So humans become streamers, influencers, creators, and themselves become entertainers, and they increasingly become part of the entertainment industry, right? So I think with a thesis like that, the idea of user-generated content actually becomes almost an inherent part of their new livelihood, their new paradigm of monetization, because their goal is to create entertainment. This is exceedingly different from play to earn gaming. And the reason why I say it's exceedingly different is the first generation of play to earn gaming was not really gaming, because people were playing to earn, and that the economic input, if you think about a game as entertainment, right, then entertainment industry is so simple, which is that people pay money to be entertained, right? Whereas play to earn gaming was people earn money from a game. But that's a very strange thing, because that means that that's not really the entertainment industry at all, right? So to me, the thing that's very interesting about user-generated content that's assisted by AI, right? Because in the history of UGC, users have generated pretty ugly content, right? Because you know, most users can't draw, right? They don't do 3D models, right? So like the idea of AI boosted UGC, user-generated content, makes more people more entertaining, right? And so the thing that becomes exciting becomes that your friends become more entertaining, right? And you may even not just pay the game company for your friends to entertain you, may pay your friend to be entertaining to you, right? So in a sense, like it creates a much bigger, broader economic opportunity within entertainment, right? So like, you know, this is a very strange application. It's not the most linear application, and it's not kind of like the class. I think when people came to this talk, they're probably imagining like, oh, it's going to be about provable inference using zero knowledge proofs, or just this very linear mashup of like, let's just take blockchain and take AI and smash them together, right? But like, I don't think it's necessarily that simple. So like for us, we tend to look for these more subtle opportunities to exploit the technology and to create better applications that, you know, users will enjoy and pay for. And, you know, I think entertainment is something that people already pay for, and in the future will pay for much more, because they'll need much more entertainment.
I think that's a very interesting pickup, because sometimes, you know, like when you mentioned about entertainment and satisfaction in terms of, you know, like the end user, sometimes it's just not receiving, but I think in your sharing and in your case, it's about interacting with the system itself and feel like, you know, like more like a contributor, you know, when they have that AI components out there. What about you, Karl? Like any particular, you know, like AI flavor, you know, like component in Web3 that you have seen interesting enough so far? I mean, like may not be best decision.
Sure. Now, I mean, like Miko mentioned, like the UGC part of like, you know, and entertainment is a very big thing for us as well. We're looking a lot of like IP plays out of Asia. So, you know, when it comes to animes and these type of things, and the way that, you know, the AI can support in generating user content and for the artists to like draw and animate things that then is applicable to Web3 is huge things for us. I think it's very interesting. Obviously from the gaming side, like I mentioned before, like, you know, when it comes to improving the game on that side, traditionally speaking, I would say DeFi is still a big application using AI, you know, when talking about, you know, AI driven credit scoring, you know, balancing wallets, you know, improving, of course, fraud detection and KYC or collateral management down to like better trading bots or strategies. So that, I guess that's a more classical example of, you know, how you would implement AI into Web3. But for us, because we're a more gaming and entertainment focused VC, I'm tend to agree much more with what Miko is talking about when it comes to what AI can do for Web3.
I think I haven't heard enough about, you know, like the data angles from any of the three of you. Is that a particular reasons why? Because I think from my, you know, observation, I think AI and data in the focus would be one of the huge advantage on a lot of the current, you know, like Web3, you know, like application out there that we are doing at the moment. You guys agree or disagree or something like that?
I would agree. I guess. I mean, there's all the kind of layers. I mean, all the way from the blockchain itself. I mean, in the future, you know, layer 1, layer 2 potentially, you know, incorporate AI-driven capacities, you know, to create scalable, more consistent protocols, you know, add security, having more data points, you know, to get more intelligent logic behind their, you know, their smart contracts, all these kind of things. But I guess it's less interesting for us, at least at the moment. So.
True. All right, so we switch gear a little bit. So let's speak a little bit regarding, you know, like investment on the DAO, right? Together with like some AI context that we're talking about. So what's your tech and investment flavor when it comes to the DAO investment and management? Maybe Lex, you go first.
Yeah, so I think that, I mean, what our current approach is, we are a centralized company. You know, it's kind of a traditional VC structure with a you know, full-time dedicated team focused on making investments on behalf of a group of limited partners, and then we're doing investment in you know, companies that are kind of along the spectrum of decentralization. we've been observing and learning, looking at different investment DAOs, and I think that there are things to be learned, and there are different organizations that, again, are experimenting with different organizational models along that spectrum of what can you centralize, what can you decentralize. So I think that we've seen some deals, and I have some relationships with folks that are at some sort of investment DAOs where, again, it's a little bit more of a decentralized approach. I don't think there's a right or wrong answer, and I look forward to seeing how sort of DAOs, how the governance model evolves, and how DAOs evolve with respect to investment firms as well as companies operating in other verticals. So that's kind of the choice that we've made in terms of our approach as a fund.
So let's stay with you, right? So regarding the DAO, so right now, do you like it like more and more like to the absolute of like decentralization, or you would like to see a little bit of centralization in there as well, right? I mean, like just personal type.
Yeah. So I think for me, I mean, I think that it depends a little bit on the vertical. One of the things that I've seen as a challenge is just like when you talk about investing, like I think you tend to want to have a smaller group of people that are deep into it so that they can really make informed investment decisions versus sort of syndicating the decision to a broader group of people. So I think that I think on balance now there's more. I think centralization of sort of investment decisions will probably persist in a meaningful way. But again, I don't think it's in either or extreme where all the way into one extreme. I do think there's elegant ways where maybe I'll just give a simple example. If you were to, as a centralized VC fund, create an incentive where people who refer deals are given some, people are already doing that now, right? They're using scouts and things like that, right? That's kind of a partially decentralized way to kind of get inputs from different stakeholders. So I think that I don't want to just weigh in and say, hey, fully centralized, fully decentralized is the model. I think there's a spectrum, and I think that there'll be some success cases with firms that sort of mix and match a blended approach.
So it really depends on what sort of purpose you would like to get out of the DAO, right? So you should design it, the way that it's bring you the most benefits and the accessibility, for example, right? What about you, Miko and Karl? Miko?
Yeah, I'm happy to talk about kind of the DAO thesis, right? Which is part of the things that we've seen is we've really seen the emergence of a new phenomenon, which is driving kind of applications, right? And I think part of what we've been doing in the space with open source software and with things like decentralization and with things like trustless networks is we've really, really been passionate about exploring the range of possibilities of the new infrastructure and protocols, right? But so including DAOs, right? So DAOs really involve novel forms of decentralized coordination, right? So these are really, really amazing experiments, right? I would say that they do have a strong place in the future. And if we were to kind of envision this, one of the biggest struggles around DAO governance has been unfairness, right? Which is that the dream has been to create a system that's even more fair. But in ways, we've created these kind of pay to win voting games, right? Where basically people use the preponderance of their ownership to kind of drive imbalanced, and even economic attacks on the systems themselves, right? So so for me, these experiments have actually been extremely informative, extremely valuable, right? But I think right now my mood is actually quite different, right? Which is my mood is that when we think about the timeframes against which we invest, we really look at the 4 to 7 year timeframe, right? So to me, when I intersect DAO with AI, I do think that the concept of DAO contains the word autonomous, right? Decentralized autonomous organization, right? So the first principle is that it must be decentralized. The second principle is that it must be autonomous, right? When you think about things that are autonomous, like an autonomous ocean robot or anything autonomous often has an AI, right? Because it's autonomous, it's doing something by itself, right? So the intersection is logical. I think for us, we think the timeframes may be a little further out. But we do think that there are very exciting opportunities because we think that the extent to which AIs can be used in governance is actually a tremendously exciting thing, right? Because most applications of AI actually further things like wealth inequality, right? They further things like extractive economic models, right? Whereas like this type of governance application for AI could potentially contribute to increased fairness, right? Which is that an AI can actually be provably fair, right? That a group of very strongly technical developers can argue over whether the data is fair, whether the data creates fairness, whether the code creates fairness, right? So ultimately, we could have kind of like governance that's based on fiduciaries, that the fiduciaries are actually based on AI, right? Because the fiduciary doesn't have self-interest. It's not trying to play any tricks, right? As long as you can mathematically prove that it's been programmed correctly, right? So to me, like, I do think that that's an exciting intersection. I just think that it's too far out. So, so I think from a direct 4 to 7 year fund life cycle perspective, that particular thesis I'm describing is probably not investable, but like, I'm definitely open to being proved wrong, right? So like, if I do see an entrepreneur with this kind of like DAO governance, AI, I'm open to talk to them and really explore that space and see if there's some real fundamental disruption possible.
No, I think it's exactly on point that, like sometimes you want the DAO component to be really driven by AI, and you want the autonomous is to be there, but then the voting rights, like you said, right? Sometimes it's being sort of in a few hands, which not too decentralized. So it's kind of against the original, like ideas of the DAO. What about you, Karl? Like the same questions, like what do you think? Like, like AI and DAO.
Personally, I'm part of many DAOs, of course. It's natural when you're a governance voter in crypto. As far as us, as a VC being a DAO, I have to agree with Alexi. Like that's not really feasible, as a VC to invest that way. I think in my experience, the investment DAOs that's worked really well has really been small mid circles where it's not really so much an issue of the unweighted or wrongly weighted voting, so to say. So I don't think it's very feasible. Of course, it's also legal opinion. Right now DAOs are still a gray zone in a lot of places. I mean, I'm based out of Singapore in Asia. There is no legal foundation for DAOs here, so it's not reasonable to operate out of such theater. But I mean, as an idea, of course, super support it. I love it, and I mean, we're all in Web3 because we believe in decentralization, right, and better fairness. And I do believe AI can definitely, support it as well. When it comes to data points, figuring out the most relevant proposals, the impact they might have if how things are voted. So there's a lot of improvements to be made. I would love to see a future where DAO do work well on large scales, organizations and investment funds. But where we are right now, I don't think it's very feasible, at least for us, at least out of Singapore, at least out of Asia, at least as a VC investing into global space.
Yeah, so I think with that, right, I'm asking, like if there are certain project type that would be potentially listed in an AI DAO driven platform, I believe there must be sort of some project that very unique in certain sense, right? Like data or some aspect. It should not be applied for every project that should be get listed on AI DAO, for example. What do you guys think? Lex?
You mean just to clarify, you mean projects that would be suitable for an
yes.
AI empowered DAO to make investments in?
Yep.
Let me think about that for a sec.
I'm happy to jump in and say, I have a heuristic for early stage venture investing based on AI, and the way it works is that it looks to see if they're from Y Combinator, and then it looks at their shoes to see if they're wearing like hip shoes, like all birds, or and then maybe they're cool color, right? And then if it ticks the boxes, then it throws a check, right? So an AI like that could replace all the VCs in Silicon Valley and create great returns. It's obviously a joke, right? So like, to me, what I'm trying to say is that like, I sincerely believe that investment decisions shouldn't be made by an AI. I think the problem with that type of a rubric is that early stage venture is founder driven, right? So I think, to me, it's people think VC is pattern recognition, right? And if it were true, then an AI would be the best at it, because an AI would just tick a bunch of boxes and be like, oh, it fits the pattern. But the thing that's really interesting is that the best entrepreneurs are pattern breaking, right?
Mhm.
And so the thing that I think is that pattern recognition isn't going to get you there, and ultimately, every journey of entrepreneurship that is kind of unicorn or greater is really one that breaks all of the previous patterns, right? So to me, like, this kind of quality of pattern breaking makes AI investors, really just kind of herd following pattern recognition bots, which I think there are investors that behave like this, but they tend not to be the ones that produce the most contrarian and outsized returns.
Cool. So what you mean, like, so all three of you are representing VCs, right? So what are sort of promising Web3 project or verticals within the Web3 that you are looking at right now? I mean, this is a cold question because the market is really cold right now. So, Karl, maybe. So, what are you looking at right now in the Web3 space in terms
Sure.
of?
I mean, like I mentioned before, officially we have a couple of verticals, but we're a single LP family office essentially in the background, so we're quite flexible. I would say entertainment and gaming. That's our biggest focus right now. We still see that it's going to be the biggest driver for the next X amount of users coming into Web3 space. We think it's very applicable. When I say gaming, also I don't necessarily mean gamify. I don't mean like Axie or like Miko mentioned, this gamified farming, so to say, or gamified, play to earn, but actual gaming, or to some degree where it's illegal, of course, like gambling solutions, those kind of things. I think it's a great marriage for Web3. Yeah, entertainment space, fan engagement. I've seen some really cool projects out there out of Korea where you can vote on your favorite K-pop band artists. So the fans manage the band itself, voting who should be a part of it, who should leave, what kind of songs should they play, etc. So those kind of solutions I think are beautiful, and they work really well globally and in Asia. So those are areas we think is very interesting, and something we're focusing a lot on in the next period.
What about you, Lex? What are you, prefer to investing in?
Yeah, so a couple of themes that are of interest to us. One is, I guess you could say the consumer bucket. So that covers gaming. SocialFi is still early, but we do think that's an interesting vertical with a bit of a longer time horizon. And then a couple other themes that are interesting to us are Bitcoin applications on Bitcoin. So we made an investment in that area. I think that's a thesis that's interesting and going to play out in a favorable way. And then sort of the whole staking and liquid staking is another vertical that we have some focus on.
Do you to go on with that, like the Bitcoin protocol, like building application on it and liquidation and stuff like that? Are you guys flexing? Flexible in terms of like protocol when you look at that, or what exactly are you looking for? In those application, because like those kind of application can be easily cloned from one protocol to another protocol, right? So what would be the main component when you're looking out for application like that?
Yeah, look, I think that I would say a broad this is a bit of a broad generalization, but there's the bucket of the sort of technology, and then there's a distribution, right? Especially it's particularly true in just blockchain and Web3 in general, is like we do think that there's varying sort of degrees of difficulty depending on how significant the technical challenge is of what someone's trying to build. I mean, a fork is probably the lowest, technological, from in terms of technological challenge standpoint, and then there's a spectrum. We're looking at, founder market fit is particularly important for, depending on whatever they're going after, making sure the founder is, it's not just when you say team, it's not just, is it a good team in general? It's like, is it the right team? Do they have a unique insight into that particular market? And then we do see a significant role of there's science and there's a huge art to like being able to build that community and that distribution side, and the community stuff really does make a difference in terms of building traction, even if you're like an infrastructure type of company. So that's kind of when you say like, oh, well, someone else could sort of replicate the technology aspect, that may be true, but building that sort of community angle, and I would say community as well as sort of liquidity. That could be liquidity of users, it could be liquidity of TVL, it could be liquidity of a community and engagement. All those things are important differentiators that in certain cases can be, if you build that sort of network effect, even though the space is small, it can be differentiating.
Agree. I mean, it's go back to all of the old boxes that you have to check. I mean, it's not the technology. I think that it's the execution. What about you, Miko? Like outside of AI, DAO, what else are you interested in right now? I'm always wanting to hear this from Miko.
Yeah, so we think this, right, which is one of the beautiful things that came up in this conversation is the idea of kind of forks and open source and kind of fragmentation, commoditization, right? And so like differentiation is really critical, right? So one of the things that we feel is that the upcoming age is really not going to be like, solved internally, as the joke on Twitter is going, right? Which is that, we have to solve real people's real problems, right? And so part of my mood is related to application focused infrastructure, right? We recently announced leading a $10.2 million round into Jiritsu, which is a user of compute verification in service of a asset verification construct, right? So like to me, like, I think founder market fit is definitely a very astute way of looking at things, right? But part of the fit today is not having what I jokingly call infrastructure focused infrastructure, right? Which is, infrastructure that just focuses on itself and doesn't have a passion for solving users' problems, right? So for us, like, we definitely have this kind of drive to find entrepreneurs. It may be that they're not at the point of product market fit, but that, we want them to have the burning passion to resolve and solve, right? Because when we think about the technology supply chain of cryptography, there's a huge and wonderful supply chain that flows from academia to open source. You're starting to see wonderful new algorithms in ZK like Plunky 3. You're starting to see wonderful papers like ZK Bridge from Bonet and Song. We just have just a wealth of new capabilities, right? But that everyone can get those capabilities, right? So the question that I think matters in this day and age is, what do people do with the capabilities to help people solve their real business problems or real world problems? The world is filled with problems. So like, we just want to find the entrepreneurs who want to help people, who want to have passion for fixing problems, and making kind of the world materially better for people, right? So, or for organizations, so either. But I would say that like, ultimately, our focus is kind of the application focused infrastructure, and I think those are really going to be the winners of, I think, the up and coming wave of technology providers.
Can't agree more. I think we take one more round of questions, and then we switch to the Q&A for the audience. Regarding a little bit of a long-term view, right? I mean, like maybe not that long. I mean, but long for crypto, maybe above over 6 months or to the next 1 year. What kind of area you see that the funding from the VC will be focusing on some of the aspect? Is it going to be Web3? Is it going to be AI, or none of the above? What's your take right now, Lex?
Yeah, so I think looking out longer, I mean, we see these sort of, I guess call it FOMO-induced, surges in funding. So, we had a huge surge in Web3 VC fund formation and investment on the heels of the 2021 bull market. Then we've seen like another version of that with AI and ChatGPT moment. So I think structurally, Web3 funding is down, but still significant. And I think that space, or the Web3, funding, institutional funding and high net worth funding of Web3 funds will come back and grow as we enter the next bull cycle. And as we start to get more and more substantive use cases and sort of end user demand that props up the ecosystem. And then I think the same, my sense is the same will be true for what I say for AI is, we're still in sort of a mania phase, and there's still like, I guess what I would characterize as like kind of overvalued. We're in that hype cycle. I think that should moderate and then normalize a bit as well. And then similarly, I think end user demand for AI will make that both buckets will be meaningful, segments within the overall kind of venture funding landscape. Venture funding overall is down now as interest rate dynamics and sort of we're in a risk off mode. But I think that it'll sort of return to the norm after a period of kind of over funding in the last cycle.
Agree. What about you, Karl? Like same opinion or?
Yeah, kind of similar. I mean, the VC funding is obviously down a lot. I mean, across the world, I would say, but I would say even more so, I guess, in the US. My experience, last few weeks, there's been a couple of conferences here in Asia, Korean Blockchain Week and Singapore Blockchain Week. And I think pretty much every single VC, crypto VC, I should say, out there has basically been, coming around trying to raise. I guess as far as the Asian side, same thing goes for the VCs. But on the other hand, we have a lot of family offices that is actually deploying a lot. I've spoken to quite a few of them over the last few weeks, and I would say a lot of the second gen of these family offices, they are very open to investing into Web3, something to the tune of 10, 15%, I would say, of their assets into the space. So I think a lot of funding will come from this type of people, going forward, whether it be out of China or Southeast Asia or US or Europe. But it's definitely like these guys are deep tech, is still a big part of them. I would say most of family offices I talk to, deep tech is their priority, includes AI. And then secondary to that comes things like Web3. So liquidity is drying up, but like Alexi mentioned, it's a FOMO thing. So, once the market is back, I'm sure we'll come back as well. On the fund side as well, people are less inclined to do so. So it is tougher out there as a fund, I guess, to raise from other funds. But, it's cyclic, right? So I think, waits until the next halving and all the politics or anything else. I think we'll see the funding coming back like I've been.
I hope. Miko, maybe you are the last one to share before we jump
Yeah, I mean, our experience is very much, we invested our first fund of 21 million into the crypto winter of 2018, 2019, right? Came out with like 8+ unicorns out of that exercise. So like, for us, we see not only cyclicality, and I think the mention of the Bitcoin halving is very welcome. Of course, April 16, 2024. So like, it's in the spring, right? So like, crypto spring, it's expected. And, it's funny. I feel like the Bitcoin halving is now kind of a Schelling point. It's coordination without communication, right? And that, it's really the barbarians are at the gate. They're swinging a battering ram, and it's the rhythm is every 4 years, right? And the thing that's amusing is every time the battering ram swings away from the gate, people think the barbarians have left, right? Like everyone's like, oh, Bitcoin's going to zero again, right? And it's just funny because they don't understand how the cyclicality is built into the structure of Bitcoin, right? So it's a very, very funny thing. I don't, obviously your mileage may vary. This is a forward-looking statement, so I'm not claiming that we're going to have a bull run in the spring, but I do think that these are factors. I do think that there's tremendous pressure on Bitcoin spot ETF within the SEC. Right. So, I just feel like, there's definitely a lot of overhang that's being burned off, right? Like, it's likely that before the end of the year, people like Celsius creditors are going to get, payouts, like, like their FTX overhang is clearing. Obviously, they have Bitcoin to sell, let them sell, right? Like, because all of this is going to put entry prices in place, and the BlackRocks of the world will be just happy to get cheap Bitcoin, and drive the next rally, right? So I think, we're very comfortable, we're super happy to be investing in, and the deeper the bear, the better, right? Because that just drives, valuations, it drives prices, and we just want to buy low and sell high.
Yeah, that's always a gutsy call, right? All right, so that's Thomas, and maybe.
So if we get myself back into the conversations, is my mic on? Yes,
they can hear. Yeah.
Okay, so because I don't see myself, so I was told my mic is on. So I like to get back into this conversation. First of all, everybody, thank you very much. Very interesting conversation, as well as all the others. Very well moderated. I do have a few questions, and I have a few comments, because I'm sitting here and listening to the whole conversations, and every single session I'm learning a little bit more. It's like a piece of the puzzle that comes all into place, and ultimately we are here to serve the developer community by enabling our WOW DAO. Now, first of all, as you are all investors, I was already planning in the back of my head to obviously knock on your doors and see if you would be willing, in the near future, to put money on the table for the WOW DAO, but we probably have that conversation at a later point. But I like to pick up on what Miko said earlier. If that is the case, I guess I need to change my outfit. I guess I made a note. I think I have to wear Birkenstocks, and I need to grow my hair a little bit longer, and then have a chance for you to write me a check, right?
I like that.
So anyway, the other comment was about autonomous and what can be done automatically with AI. But Cris, you raised a very good point, and that is there's definitely a lot of opportunities and room here to automate a few things with AI. But at the same time, because we are a DAO, a member-driven organization, you have to allow the members who are participants and own tokens or ownership to make that decision. I think there's a fine line, right, between the two. If you have listened, I know, Cris, you have, I don't know the other speakers here, but in the previous presentation by Olaf, who is literally traveling the world twice every summer and speak about Web3 and AI and the intersection, he also pointed out, that the party is definitely happening more on the combined Asia side, clearly. But the other thing is that he also pointed out that there are a lot of interesting opportunities in the Web3 and blockchain when it comes to enterprise use cases. And you guys mentioned it before too, solving real problems in real life. Yet at the same time, so Miko, I'm totally with you, but at the same time, if I'm listening to you and what you have invested in, it's entertainment, it's gaming, it's social bias in the future, I still don't hear a lot of interesting use cases and startups where the enterprise use cases are coming out of the weeds, and everybody is so I'm feeling a disconnect.
True.
What's the opinion? What's your opinion? Is there a disconnect, or the developer community hasn't figured it out? What you have figured it out, but you don't see it, what's being needed?
So there's three things that you have to contemplate, right? Which is, I think, one of the things to contemplate is the disruption of Nash equilibria, right? So the disconnect to me is like, part of that is about linearity, right? So it's sort of like, if you look at sort of investment, then you can look at this and say, well, it doesn't really connect, right? But the question becomes, what's the business timing of the connection, right? So that's A, right? I would say that B is, I think the other thing that's very interesting is when you look at the frontiers of like the solution to problems. One of the catalysts, for example, on the DeFi side is actually with TradFi, right? Which is the emergence of a regulated DeFi, right? So regulated DeFi is definitely a strong theme that we're pursuing, and we think that what's happening now is that the regulated segment of the market is actually restricted from exposure to this much more wonderfully deterministic automated liquidation, transparency, beautiful ledgers that are kind of like, just better. It's better software, right? So like, to me, that's a really big kind of upward catalyst, which is the emergence of a regulated DeFi that I think of as deterministic finance rather than decentralized finance. Or obviously there'll be permissioning, there's going to be gating related to KYC, so there's definitely going to be like a zone that has kind of a clean catalyst. So that solves kind of really, really fundamental problems with respect to our infrastructure for financial services worldwide, right? So better financial rails is a very well-known problem, so I think those are really interesting problems that I think for which there is kind of significant potential and product market fit, right? And then I would say that the third thing when you're talking about so-called enterprise applications is I think that that hasn't played out quite yet. And the reason it hasn't played out quite yet is that we've been trying historically in the first wave to kind of force fit full decentralization onto the enterprise, right? So the idea of enterprise blockchain is probably one of the worst ideas you'll hear, right? Because the term blockchain is really the maximally decentralized model, right? And you're trying to serve maximally centralized organization, right? So to me, that's not the right spirit. The correct spirit becomes, can we take the themes, insights, knowledge, and fundamental technologies, base layer technologies, such as compute verification, fully homomorphic encryption, zero knowledge computation, multi-party computation, can you take things like cryptographic custody, and all of these kind of foundational atomic design patterns and emerging technologies and apply them to solve trust problems within the enterprise, not requiring tokenization, not requiring kind of ambiguous regulatory concerns, and not requiring this kind of full decentralization, but really just solving enterprise problems. Like, we haven't even really started in on this, but I can tell you one of the insane catalysts that's coming down the pike that will absolutely spark the frenzy of enterprise applications is regulated stablecoins, right? Because if you bring Bitcoin into an enterprise that's not called MicroStrategy, the legal department will throw a fit, right? And then if you bring any kind of like Bitcoin into an organization, right, then the other departments, like the accounting department, will throw a fit, right? So everybody's like confused because they're like, I don't understand what this is, right? But if you have a government and bank regulated stablecoin, the enterprise will look at that, the accounting department will be like, what is this, right? The bank says this is $1, right? Compliance and legal will look at this and they'll say, what is this? And basically the government says this is $1, right? Everybody knows what to do, right? So as soon as you have that, it becomes just better rails. It just becomes better rails, for payment. It's a better rails for, doing all kinds of international payments, all kinds of B2B business and procurement, acquiring any kind of, online services. And, even when I say B2B, it could even be bot to bot, right? It can be like automated purchasing of things like SaaS software, things like, microservices, so there's so many kind of things that happen when you see the emergence of a government regulated, bank regulated stablecoin, right? So to me, like, I definitely think it's trying to force fit fully decentralized blockchain on fully centralized enterprise. Of course it's been bad, right? And it's, so to me, like,
now let's say
at the moment, I just want to say that, like,
go ahead, you're passionate about it.
We're currently recoiling from the attempt to create this forced marriage, right? So now the participants have recoiled in horror. Obviously, consumers have recoiled in horror from FTX and the kind of fraudulency, right? The smashing of decentralized tokens into the enterprise, they're recoiling in horror. So right now we're at the peak of recoiling in horror. But I think that, like, it doesn't mean we won't win.
On that note, I would like to have one question from the audience, please.
Yes, we have. What specific factors do venture capitalists consider when evaluating blockchain startups for investment? And how has this criteria evolved over time?
So we have 2 minutes. Somebody can pick this up.
It's a complex question, I guess, to summarize. Personally, for us, we were quite early, so I would say, like, I think Miko mentioned before, it's a founder-centric, assessment, basically, right? Being able to pivot, being able to, manage, being able to have the right market fit. So it's very much, founder-centric approach. It's a bit different, but that's also because it's early stage pre-product. So yeah, I don't know how to summarize it better in 2 minutes, to be honest. Maybe Miko or Alexi.
It's all good. We cannot address and solve all the problems in the world just within one session, but it's a good start. It's a good conversation. I am standing here representing the WOW DAO, and hopefully I am representing the entire AI developer community. I would say from somebody who is trying to help starting a DAO, one of the biggest issues that I think we need to address from the founding members team, so to speak, is the governance itself of the DAO. But it's your feedback today that we will take in consideration to ignite the vision and the ideas of an entrepreneur to actually pick up on the problems to be solved that you would like to see. And hopefully, you ignited some developers and startups out there to look into the directions where you see some opportunities. So with that, gentlemen, thank you very much. Cris, thank you very much. I will see a very interesting fireside chat. I'm very much looking forward to it.
Yep.
Thank you. Thank you, everybody.